During 2008's financial crisis, we saw large increases in the VIX price as investors sought protection. Through March and most of April this year, VIX was sitting in the teens. The rest is pretty well documented, with VIX moving up over 60% in one day, then down 30%, then up again. Why has this been such a bumpy ride? Joining me now for the answer to that question is Ben Lonergan, and he is the co-CEO of Group 1 Trading, the designated primary market maker of VIX options here at CBOE. Great to talk to you today. And what do you think about this bumpy ride?
Well, it's really interesting. What's really happening right now is that as the market's moving up and then moving down, there's a lot of correlation in the marketplace, which means that stocks are really moving together. And the reason or the rationale for that is that everything that's happening in Greece really is, and Europe in general, really has a strong, powerful effect on the overall economy. So if it looks like the euro is going to disintegrate, that likely means that you're going to have a lot of economic turmoil and a lot of bad things happening for the next, who knows how long. And on the flip side, if they can come out and solve the crisis, it looks like the U.S. is poised for somewhat of a recovery. So at some point in time, you have this large, almost binary event where on the positive side, if they sort things out, things look like they should go fairly well. On the flip side, if things fall apart, you're going to have another very 2008-like crisis in confidence and crisis in credit and lending and monetary policy.
Before the 2008 financial crisis, 30 was considered psychologically significant, and over 30 meant that there was more fear in the market. Recently, the VIX has risen above 40. So what does that tell you? Is 30 still a significant guideline or just a place where stops are accumulating?
I'd definitely say 30 is still a significant number. Anytime VIX is above 30, it's generally going to tend to mean that there's something out there that's moving the market or that's causing a great deal of uncertainty in the marketplace. With VIX going, up to 80, it certainly is less important in terms of people thinking, well, it can't get much above 30. Obviously, it's now today rose above 40. So at some point in time, 30 is important. Once you go above 30, it certainly still means that there's a lot or a considerable amount of fear in the marketplace. But it's more of a stop on the way rather than a high point, which is kind of what it had been seen as previously.
You mentioned that Greece has been a factor in the markets, but Greece is really only 2% of the GDP in the Eurozone. So do you think it's going to continue to be a factor, or are there other issues that people should be watching for in the broader market that are influencing the current levels on the VIX?
Well, everything is tied to Greece, I think, in one way or another. It's certainly a small economy with respect to the rest of Europe, but that's actually part of the problem, is that they are a small economy and they do produce a small percentage of the GDP, but the amount of money it's going to take to bail them out is significant. The other part of the problem is that if it was just Greece and that was the only concern in the marketplace, getting beyond that I think would be a lot easier, and the stimulus packages people were talking about probably would have handled people's concern with respect to the European issue. The real problem is that it's not just Greece, it's Spain, it's Italy, it's Ireland, it's Portugal. There were some talks last week about France, and so at some point in time, the more countries you add in there and the more uncertainty you get, the larger the possibility of a larger scale meltdown in Europe, and that really is causing, I think, a lot of the volatility and a lot of the uncertainty in the marketplace right now.
We've seen big trading volumes in the VIX, but not just during extremely volatile markets. So what does this say about VIX as a trading instrument?
It's actually interesting. We've really seen volumes pick up as when VIX was in the teens, and I think it really talks about how people are using VIX as a hedging instrument. To some extent, it's a lot theoretically more interesting to hedge or to buy insurance when the insurance is cheap, and so at some point in time when VIX is trading 18, buying protection on your long portfolio certainly is significantly cheaper than trying to do it with VIX at 35 or 40. So, that being said, as VIX rallies, we tend to see huge amounts of volume. Overall, we've seen significant increases in both the options and the futures this calendar year, and I really attribute that to people understanding better how to use VIX as a hedge, people trying to protect their portfolios. So as S&P 500 crested above 1,200, I think a lot of people felt like it was a really good time for them to start protecting their portfolio. A lot of people had bumpy rides. They rode the S&P 500 down to 700, 800, and I think a lot of people looked at 1,200 and said, I don't want to see my equity portfolio disintegrate again, and started looking at using VIX options and futures as a hedge for that.
There seems to be a lot of concentration on VIX options, and yet percentage-wise, the trading volumes on VIX futures have been increasing over the last 6 months, higher than what's happening in the VIX options. So what do investors and traders need to know about using the VIX options and the futures?
VIX futures are actually really interesting and have been really interesting over the last 6 to 12 months. We feel like VIX futures, if you look at the time curve, really give you a lot of important information about what the market's expecting, not only now, but to happen to volatility in the future. So over the past few months, we've seen a rather significant discount between the front month future and the back month future curve, which tends to indicate that there's going to be more volatility moving forward, which indeed happened to be the case. And we feel like there's a lot of interest in trading the spread between the front and second and maybe the second and third month futures. So people are effectively taking positions on the future side saying, I think volatility is going to increase, and a good way to position myself for that is to buy the front month future, sell the back month, or vice versa. And when it comes to options, we feel like people are generally tending to play options on 1 month only, so there tends to be less inter-month spreading and more focus on a single month, generally the front month position.
Would you care to give your best estimate on which way you think the VIX will be moving in the next 2 to 3 months?
Yeah, sure. My opinion, and you asked me on actually a good day for me, is that VIX is likely to go down, with VIX closing over 40 today and being up almost $10. It's easier for me to say that over the next 2 to 3 months I would expect it to go down. Unfortunately, perhaps the more interesting question is what's going to happen to VIX over the next 2 to 3 days. My guess is it's going to be highly volatile. It's almost a coin flip whether or not it will go up tomorrow or down tomorrow. VIX options right now are telling us that the volatility of the VIX is going to be rather high, so that $3, $4, $5 moves in the futures and $6, $7, $8, even $10 we had today moves in the cash are going to be more and more likely. That being said, it's difficult for me to believe that VIX could hold a level of 40 for 3 months, although that did happen in 2008, so it's certainly not impossible.
Thank you very much for your insights. We've been speaking with Ben Lonergan. He is co-CEO of Group 1 Trading. From the floor of the Chicago Board Options Exchange, I'm Angela Miles for CBOE.